So a very good afternoon. Just a small clarification so that I don't repeat myself. I remember we did residence. Yeah, I think we completed residence, if I'm right. We must have completed the concept of residence, like residence of an individual, residence of our body corporate, and then significance. How do we treat different types of income depending on whether a person is a resident or a non-resident? I'm sure we did that. So now that we did that, I think we need to start on taxation of employment income. So our next topic, I'll look at taxation of employment income. Taxation of employment income. Taxation of employment income there. So here, I'll do a number of things today. I'll define employment. Then I will look at what we call cash benefits. Look at cash benefits. Then we look at the taxable income. Is it non-taxable income? Yeah, non-taxable income. Then we look at liable deductions. Liable deductions against employment income. Liable deductions against employment income. I think that's it. So if you're able to do all this, then you'll have completed employment. Okay? So that's just a summary of what I intend to cover today. All right. So let's start with definition. So what is employment? What is employment? So employment, you say employment is a contract. Employment is a contract for services. Employment is a contract for services. To say employment is a contract for services between the employer and the employee. Employment is a contract for services between the employer and the employee. Between the employer and the employee. The employee provides services. The employee provides services under the contract. The employee provides services under the contract. The employee provides services under the contract, while the employer provides remuneration. While the employer provides remuneration. While the employer provides remuneration for the services. While the employer provides remuneration for the services. or the employer provides remuneration for services. Then you say employment income, employment income, employment income is derived in form of employment income is derived in form of employment income is derived in form of A, cash benefits, and B, non-cash benefits. Employment income is derived in form of A, cash benefits, B, non-cash benefits. So let's start with a subheading, cash benefits. Cash benefits. Cash benefits. Then you say these comprise of payments. This comprises of payments. This comprises of payments, including. This comprises of payments, including. This comprises for payments, including. Put a column. So we list these payments. This comprises of payments, including. Put a column. A, cash receipts from employment. Cash receipts from employment. Cash receipts from employment, such as salaries. Cash receipts from employment, such as salaries. Cash receipts from employment, such as salaries. Leave pay, overtime pay, etc. Cash receipts from employment, such as salaries, leave pay, overtime pay, etc. That's an example of cash benefits. And another example, B. B, cash allowances. Cash allowances such as housing. Cash allowances such as housing. Cash allowances such as housing. Entertainment. Cash allowances such as housing. Entertainment. Hardship, etc. Hardship, etc. So that's B. Another example, C. Another example, C. Expenditure incurred by the employee. Expenditure incurred by the employee, which is paid for by the employer. Expenditure incurred by the employee, which is paid for by the employer. Expenditure incurred by the employee, which is paid for by the employer, such as expenditure incurred by the employee, which is paid for by the employer, such as monthly shopping or grocery bills. 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 Then the next one should be D. Contributions made by the employer. Contributions made by the employer. Contributions made by the employer on behalf of the employee. Contributions made by the employer on behalf of the employee for insurance. For insurance or mortgage payments. For insurance or mortgage payments. For insurance or mortgage payments. So those are cash benefits. So they vary from different places of employment, but that could be basically generally what a person would receive as cash, what will be paid out to you as cash. There could be varieties here and there, but basically it's that. Any question? Okay, now we move to non-cash benefits. So let's go to non-cash benefits. Non-cash benefits. Non-cash benefits. So just as the title suggests, sometimes they call them benefits in kind. They may not be in form of cash, but they would still be part of employment income. So we still include them as part of the employment income. So non-cash benefits, let's start with A. We call these ones facilities. Facilities. Facilities, then we say, these are benefits or advantages. These are benefits or advantages enjoyed by the employee. These are benefits or advantages enjoyed by the employee. These are benefits or advantages enjoyed by the employee in connection with his employment. In connection with his employment. In connection with his employment, such as free transport, such as free transport, such as free transport, such as free transport, free company products, etc., free company products, etc. Then you say the taxable aggregate value. The taxable aggregate value of a facility, the taxable aggregate value of a facility is 3,000 shillings per month. The taxable aggregate value of a facility is 3,000 shillings per month or 36,000 shillings per annum. The taxable aggregate value of a facility is 3,000 shillings per month or 36,000 shillings per annum. So what that means, if you get some advantage from your employment, like being transported from your house to work, or getting company products, you work for BIPCO and probably they allow you to take some products, cooking oil, some soap, panga soap, and so on. Whether we tax it or not depends on the value. So we have to add everything you receive from employment in form of a facility or an advantage. If the aggregate, the total, is less than 3,000 shillings, you ignore them. But if the aggregate of a facility is 3,000 shillings or more per month, that's 36,000 shillings per year, then that's an indication you should include it. It should be included as part of the taxable benefits on the salary of the employee. So those are facilities. Then B, say servants. B, servants. Servants. So you say, where the employer has provided the employee, where the employer has provided the employee with servants, where the employer has provided the employee with servants for his benefit, with servants for his benefit, with servants for his benefit, such as a house help, watchman or driver, the taxable value of the benefit, The taxable value of the benefit is the actual cost to the employer. The taxable value of the benefit is the actual cost to the employer. The taxable value of the benefit is the actual cost to the employer. So what does that mean? It will be the actual salary. So you're told these employees provided with a driver, the driver is being paid 15,000 shillings per month. That is what we include as the value of benefit to the employee. So that was B. Then C, put services. So here services refer to things like electricity or even water. So if the company has provided, probably is paying for water bills or electricity bills, then that's a benefit, it is taxable. So services, you say, where the employer has provided electricity or water to the employee, the taxable value of the benefit shall be the higher of, whichever is higher, shall be the higher of where the employer has provided electricity and water for the benefit of the employee. The taxable value shall be the higher of, so the higher of, we put Roman 1. Roman 1, you compare the amount prescribed, or the prescribed amount, when we call it, the prescribed amount. Or compare Roman 2. Roman 2 will be the actual amount, the actual amount of bill. So we'll compare these two, whichever is higher. So the prescribed amount will be given to you. So if you forget, if you look at the top of your past papers, you're going to find where they put services. There's a place they put services. Electricity, the rate, the prescribed amount, or the fixed amount, or the quantified amount is 1,500 a month, or 18,000 per year. For water, the prescribed or the fixed amount or the quantified amount is 500 shillings per month, or 6,000 shillings per year. Now, those prescribed amounts you compare with the actual bill that the employer was paying. For example, if it is electricity and the employer has been paying 3,000 per month as electricity bill, of course, if you compare with if you compare with 1,500, the prescribed amount, you choose 3,000, because 3,000 is high. So that's how it goes with services. Then D should be telephone services. Telephone services. Then you say where the employer has provided telephone services for the benefit of the employee, where the employer has provided telephone services for the benefit of the employee, the taxable value of the benefit, is 30% of the bill. The taxable value of the benefit is 30% of the bill, the telephone bill, 30% of the bill. Then you go to E. E is furniture. Then for E, you say, in case the employer has provided furniture. for the benefit of the employee, in case the employer has provided furniture for the benefit of the employee, the taxable value shall be 1% per month. The taxable value shall be 1% per month of the cost of the furniture. The taxable value shall be 1% per month of the cost of furniture. The taxable value shall be 1% per month of the cost of furniture. Okay, very well. Then we'll do one more, then look at an illustration before we can continue with others. So let's look at, this should be F, yeah, F. F put car benefit, and you say where the employer has provided a car, for use by the employee, the taxable value of the benefit shall be, put a colon, Roman 1, the amount or the prescribed amount on the basis of the CC rating. The prescribed amount on the basis of the CC rating of the car. The prescribed amount on the basis of the CC rating of the car. Or Roman 2, 2% per month. 2% per month of the initial cost of the car. 2% per month of the initial cost of the car. 2% per month of the initial cost of the car. Now there's something I've remembered which is very common, and I didn't give you under the list of cash benefits. So please, under the list of cash benefits, under allowances, I want you to give this specific example, under cash benefits, these cash benefits, there was B, where we're talking about cash allowances. Give another example of cash allowances. Call it subsistence. Subsistence allowance. Subsistence allowance is also called per diem. And allowance is B. There is another example. Put their subsistence allowance or per diem. So subsistence is what you get as a daily upkeep, especially when your employer sends you for a work assignment outside your location. For example, you're in auditing and you've traveled to Nakuru or to Eldoret for purposes of work. So your employer gives you a daily allowance. Probably you're getting something like 15,000 every day. That allowance is called subsistence for food and accommodation. Now, the treatment of subsistence is 2,000 per day received will not be taxed. 2,000. Anything above 2,000 will be taxable for subsistence. So up to 2,000 shillings per day is exempted from tax. Anything above 2,000 is taxable. So any question up to there, we've done up to F. So I want to take an illustration just to summarize that, and then we can continue with other benefits. Any question? Any question? So let's pick our first illustration. So illustration saying Mr. Olemboga. So we call him Mr. Olemboga. Mr. Olemboga, an employee. Mr. Olemboga, an employee. Mr. Olemboga, an employee of BD. BD Company Limited, an employee of BD Company Limited, received his employment income, received his income from employment, received his income from employment in 2023. Received his income from employment in 2023 as follows. Received his income from employment in 2023 as follows. Put a column, number 1. His basic salary of 850,000 shillings per annum. His basic salary of 850,000 shillings per annum. His basic salary of 850,000 shillings per annum. Number 2, a day and night watchman. A day and night watchman whose salaries were. A day and night watchman whose salaries were 10,000 shillings per month. A day and night watchman whose salaries were 10,000 shillings per month and 15,000 shillings per month, respectively. 10,000 shillings per month and 15,000 shillings per month, respectively. Number 3, furniture was provided. Furniture was provided at a cost. Furniture was provided at a cost of 480,000 shillings. Furniture was provided at a cost of 480,000 shillings. That's number 3. Number 4, he was provided with electricity. He was provided with electricity and water. He was provided with electricity and water for his use. He was provided with electricity and water for his use. That's number 4. Number 5, he was sent. He was sent on work assignment. He was sent on work assignment. He was sent on work assignment. He was sent on work assignment to Nakuru and was paid. He was sent on work assignment to Nakuru and was paid 10,000 shillings per day. He was paid 10,000 shillings per day. He was paid 10,000 shillings per day for 10 days. For 10 days. For 10 days. Number 6, he was provided with a car. He was provided with a car of 2,000 cc. He was provided with a car of 2,000 cc, whose initial cost is provided with a car of 2,000 cc, whose initial cost was 1,500,000 shillings. He was provided with a car of 2,000 cc, whose initial cost was 1,500,000 shillings. Number 7, the company paid his telephone bills. The company paid his telephone bills averaging, the company paid his telephone bills averaging 5,000 shillings per month. The company paid his telephone bills averaging 5,000 shillings per month. Number 8, he was granted free company products. He was granted free company products. He was granted free company products. He was granted free company products valued at 4,500 shillings per month. He was granted free company products valued at 4,500 shillings per month. valued at 4,500 shillings a month. And finally, number 9. I think we have served. I'm trying to put in as much as possible. Okay. Number 9, finally. His mortgage. His mortgage payment. His mortgage payment of 8,000 shillings per month was made by the employer. His mortgage payment of 8,000 shillings per month was made by the employer. Required a statement of taxable income, for Mr. Olemboga, a statement of taxable income for Mr. Olemboga for the year ended. A statement of taxable income for Mr. Olemboga for the year ended 31st December 2023. A statement of taxable income for Mr. Olemboga for the year ended 31st December 2023. So we shall compile. So employment income is about compiling. So let's compile these items from number 1 to number 9. That's the title, Mr. Olemboga. So we're preparing a statement of taxable income. The year ended. So we'll just bring the items the way we had recorded them. Stacy is asking, is this class for ATD? Well, it's the same thing. So if you're doing tax, it's the same tax. So you don't have to worry. It's the same taxation. So taxation is the same for ATD and for intermediate. Is it intermediate or foundation? It's the same thing. Foundation. So we are talking about the same thing. So from the list of items, we bring in each one. So we'll start with basic salary. So basic salary is a cash benefit or cash receipt from employment, is taxable. We are told per annum is 850,000. So we bring in 850,000 to tax. Per annum, 850,000. So I'll put here 850. So that is income for the whole year. That was number 1. Then number 2, he had been given servants in form of watchmen. So there was a day watchman. So we have 2 watchmen. So these are servants. So So there's a day one. The day one is being paid 10,000 per annum. Times 12 months is 120. So put 120,000. For the day watchman, then there is the night watchman. The night watchman is being paid 15,000. Times 12, I think that gives us 180,000. So 15,000 a month times 12 is 180,000. That was number 2. Number 3 was furniture. It was provided with furniture. So the taxable value of furniture, we said, is 1% every month of the cost of furniture. That's why the cost of furniture was provided at 380,000 shillings. So the other benefit he had was furniture. The taxable value is 1% per month of the cost of furniture. The cost is the whole year. I'll multiply by 12. 1% is per month. And go. So that's furniture. That was number 4. Number 5, he was provided with electricity and water. Now, the examiner doesn't say what is the value. If you have the value, you compare. I'll compare, like if you have the bill, how much was the cost, then I would compare with the fixed amount, which is usually given, the fixed amount or prescribed amount. But this time, the examiner just says the electricity. So if he says electricity, you go to your past paper, under services, electricity is 1,500 per month. So for the whole year is 18,000. So electricity was provided. So electricity is 18,000 per year. And water was also provided. We don't have to compare because we did not have the bill. So we are using the prescribed rates, and those are usually provided in your past papers. So water bill is 500 a month or 6,000 per year. Then the next number, number 5, must have been the per diem, subsistence allowance. You went to work in Nakuru and was being paid 10,000 per day. Remember, the first 2,000 out of 10,000 every day is exempted from tax. So there is a daily allowance. We call that per diem. Per diem is 10,000 a day. Remove 2,000 because 2,000 is exempted, and he worked for 10. He was in Nakuru for 10 days. So that's 80,000. Then number 6, he was provided with a car. You've been given the CC is 2,000. The initial cost of the car is 1,500,000. So you compare. So for the car benefit, you start with CC basis. So you are told 2,000 CC. So if you go to your past papers at the top there, they've arranged the number of CCs. If you refer to 2,000 CC, the rate is 7,200 per month, and it's also given monthly and annually. The annual is 86,400. So I'll put this aside because I'm comparing. 86,400 is the annual, or 7,200 per month. I will compare with the prescribed rate of 2%. 2% is per month of the initial cost of the car times 12 months. So the 2%, you must remember, the examiner will not give you that. So if you forget that, then you'll be in trouble. So 2% per month is 24% per year of the initial cost of the car, 1.5 million. and that gives us 360,000. So these two will be compared with this. And we said, take the highest. The theory says, take the highest. So the highest between the two is 360. So that's the value of the car benefit. So that was number 6. Then number 7, the company paid for his telephone bills, and the bills were an average of 5,000 shillings per month. So telephone, the rate is 30% of the bill. The bill was 5,000 per month times 12 months. Then you get 30% of the bill. So that would be the taxable value of the benefit. So that's 60,000 per year. So telephone is 18,000. That's telephone bill. And that was number 7. Number 8, he was granted free company products, and the company products were valued at 6,000 shillings a month. So company products, in case you've forgotten, are facilities. We call them facilities, and we said to tax them, the minimum value should be 3,000. So obviously 6,000 should be taxed. So we have free company products. For 6,000 per month. Then finally, number 9 is a cash benefit because the employer paid his insurance. We said the insurance was 8,000 per month and it was being paid by the employer, so it's a cash benefit. So we have insurance. Insurance is being paid by the employer. Paid by employer, so it's a benefit. So 8,000 per month for 12 months. That's 96,000. Once you have all this sorted, you simply add. The total of this is the total benefit. So total taxable income. This is the amount that will be taxed on Mr. Olemboga for that year. So you simply add this. So let's add to get the total taxable income. So you have 850,000. We add 120. We add 180. We add 45, 600. We add 18,000. We add 6,000. We add 80. 360. We add 18,000. We add 72. 96. And it will be taxed on 1,845,600. So that is what we are going to calculate tax on. Any question?
Yes. Can you repeat?
Anyone with a question? Yes.
Can you repeat the free company products?
But company products is here. This 6,000 per month for 12 months, 72 is free company products. Yes? Any other question? So we had included company products, it is here. Okay, if there's no question, we move on to the next non-cash benefit. Car was called G. Now I'll call this one, no, car was F. Now I'll call this one G. It's called housing benefit. Housing benefit. So the question we want to answer here, suppose the employer is paying for your house or has provided a company house, it becomes a benefit. How do we calculate that benefit on the employee? How do we calculate the benefit? So housing benefit is G. We say employees are categorized. Employees are categorized. Employees are categorized into 4 types for purposes of housing. Employees are categorized into 4 types for purposes of housing benefit. For purposes of housing benefit, then you put a column. Employees are categorized into 4 types for purposes of housing benefit. So the first one, Roman 1, put ordinary employees. Ordinary employees. Ordinary employees and full-time service directors, full-time service directors, ordinary employees and full-time service directors. That's the first category. Another category, I'll put from 2. I'll say agricultural employees. So agricultural employees. Then Roman 3, food. Non-full-time service directors. Non-full-time service directors. Then Roman 4, let's put employees provided with both accommodation and meals. Employees provided with both accommodation and meals. So there are those first 4 categories. So let's pick the first category. Put this as a subheading: ordinary employees and full-time service directors. Ordinary employees and full-time service directors. Ordinary employees and full-time service directors. Then you say a full-time service director. A full-time service director. A full-time service director is a person who owns. A full-time service director is a person who owns not more than 5%. Not more than 5% of the total share capital. Not more than 5% of the total share capital of the company. Not more than 5% of the total share capital of the company. Not more than 5% of the total share capital of the company, and is serving as a director, and is serving as a director, and is serving as a director in the company, and is serving as a director, is serving as a director for the company, or of the company, on a full-time basis. On a full-time basis. On a full-time basis. Then you say, housing benefit shall be determined as the hire of. Housing benefit shall be determined as the hire of. Housing benefit shall be determined as the hire of Roman 1. The hire of Roman 1. 15% of the total gains from employment. 15% of the total gains from employment. 15% of the total gains from employment gains, from employment, or Roman 2, market rental value, market rental value, market rental value of the house, market rental value of the house. Then a new sentence after that, you say, less his own contribution, less his own contribution, less his own contribution, less his own contribution towards the house, less his own contribution towards the house, less his own contribution towards the house. So what do we mean by that? So we are saying if you have a director who is a full-time and his shares in the company, share capital, is not more than 5%, if he's provided with a company house, you will get 15% of the total gains from employment. So total gains from employment, like in the previous case, total, these are all gains from employment. So the total is 1,845,600. That's what you call total gains from employment. So you get 15% of that. Then you compare with the market rental value of the house. The market rental value, the examiner will give you. He'll say, houses in the area where this employee lives is an average of 50,000 shillings per month, or 25,000 shillings per month, or 30,000. So whatever the examiner gives you, that's the market value. So I'll compare 15% of the total gains from employment. I'll compare the market value. I will choose the higher, or the highest of the two, but then I will lessen anything the employer was deducting as part of the housing every month. It's called nominal rent or his own contribution. So let's take an illustration on that. So illustration, or example, whichever is comfortable for you, you can use example, illustration. So you say, assume that Mr. Olemboga in the previous illustration, assume that Mr. Olemboga in the previous illustration was provided with a company house. Assume that Mr. Olemboga in the previous illustration was provided with a company house, and that, put a colon, and that, number one, the market rental value, the market rental value of the house, was 35,000 shillings per month. The market rental value of the house was 35,000 shillings per month. Then number two, his own contribution towards rent. His own contribution towards rent was 10,000 shillings a month. His own contribution towards rent was 10,000 shillings a month. Then you say required, compute the housing benefit. Compute the housing benefit for Mr. Olemboga. Compute the housing benefit for Mr. Olemboga. So let's compute housing benefit for Mr. Olemboga. So let's do that. So we say here, housing benefit. Housing benefit, you'll take Roman 1, 15% of total gains from employment. The total gains from his employment is 1,845,600 for the whole year. So 15% of 1,845,600 for the whole year. And that gives us how much? So we get 15% of 1,845,600. and that is 276. So 276. 840. Now we'll compare with Roman 2, the market rental value. So the market rental value of the house was 35,000 per month. So we take 35,000 multiplied by 12 for the whole year, 420. So we compare here, 420. Then I do that. I'm comparing. The theory says take the highest. So the highest is the market rental value 420. So I'll say HB, that is short for housing benefit, is the higher. So the higher amount is 420. Then you say less his own contribution. So his own contribution was 10,000 every month. The employer was deducting. So for the whole year, that's 120,000. And we deducted 120,000. So housing benefit, which would be taxable, is 300,000. That is what you add to the other incomes. So housing benefit of 300,000 will be added to 1845, 600. You know, so that you tax the whole amount. But that's how you calculate housing benefit. But only for the first category, category A. So category A is for ordinary employees. So any employee in the company and a full-time director who does not own more than 5% of the total share capital. This is how you calculate housing benefit if they are provided with housing. Any question? Anyone with a question? Okay, then we go to the next category. It was for agricultural employees. So the next category is agricultural employees. Agricultural employees. Then you say, these are employees. These are employees. These are employees engaged in agricultural enterprises. These are employees engaged by agricultural enterprises. By agricultural enterprises, by agricultural enterprises, whose terms may require the employer to provide them with housing. Whose terms may require the employer to provide housing. Whose terms may require the employer to provide housing at the plantation. To provide housing at the plantation or farm. At the plantation or farm. Then you say, housing benefit shall be determined as the higher of. Housing benefit shall be determined as the higher of. Housing benefit shall be determined as the higher of. So it will be the higher of 10% of total gains from employment. 10% of multiplied by total gains from employment. Total gains from employment. So you can see those who work in agriculture are given some preference. So this intended, it's intentional that many people might wish to work in agriculture. So instead of the housing being calculated at a higher rate of 15% for tax purposes, it's calculated at a lower rate of 10%. So anytime you have a question that is agri-based, you know, you have an employee who is working in a plantation, a chicken farm, a farm rearing cows, you know, or planting crops, and they are provided with housing, you will use 10% for housing benefit. Any question? Any question? So this was the second category. The next category was non-full-time service directors. Full-time service directors. Non-full-time service directors. Non-full-time service directors. So we say these are company directors. These are company directors that are not serving on full-time. These are company directors that are not serving on full-time. These are company directors that are not serving on full-time basis, are not serving on full-time basis, and own shares. And own shares of more than 5%. And own shares of more than 5% of the total share capital of the company. And own shares of more than 5% of the total share capital of the company. Of the total share capital of the company. Then you say housing benefit shall be determined as the higher of housing benefit shall be determined as the higher of, put a column, housing benefit shall be determined as the higher of Roman 1, 15%, 15% times total gains. Total gains from employment. Total gains from all sources, from all sources. Total gains from all sources, e.g., employment, trading, farming, etc. So I want you to notice the difference. For full-time service directors, it's only 15% of gains from employment, but for non-full-time service director, include any sources given in the question, whether they have sources from trading, from farming, from partnership, any source will be included in the 15%. Compare with Roman 2, market rental value. Market rental value. Then you say less his own contribution. His own contribution towards rent. Whatever it is the employer is deducting as rent every month would be deducted as own contribution. Any questions so far? Anyone? We are looking at housing benefits. Anyone? Okay, so that's non-full-time service directors. Then there's the last category of employees, and that's employees that are provided with both accommodation and meals. That essentially means the employer has provided a place to stay and has also provided food. Has provided food and accommodation. So in case like that, because their benefit is higher, the rate of tax is also higher. It is 20%. So this category is for employees provided both accommodation and meals. Employees provided with accommodation and meals. So you say these are employees whose terms of employment provide whose terms of employment provide for food and accommodation. For food and accommodation, and accommodation paid for or provided by the employer. Food and accommodation by the employer, sorry. Food and accommodation by the employer. Then you say, housing benefit shall be determined as, housing benefit shall be determined as, housing benefit shall be determined as, this is how you are going to determine housing benefit. Roman 1, 15% times, sorry, not 15, but 20%. 20% times total gains from employment. %. So an example of employees provided with both accommodation and meals would be those who work in hospitality, like hotel. You know, if the employer has allowed you to stay in the rooms and you also get your meals there, then the employer must remember to include 20% of the total gains of such an employee. Now, this will cover for food and accommodation. So those employers who have provided, like those who I once was hosted by a student. One of my students was an accountant in a group of hotels in Mombasa, and he gave me a complimentary ticket, and I was very, very grateful. He gave me a complimentary, meaning I was not paying, but I was paying for my family. And we went down to the coast, and I saw firsthand, apart from us, we went during a low season. I think it was around April. There weren't many people in the hotel, but some of the employees had chosen to stay in the hotel. So when you were in class, I told the student he is expected to take 20% of their total gains. And he was surprised because he told me, we don't do that. We've always assumed that it's just part of work. I told him that's what the Income Tax Act requires, that you as the employee, it's not the employee, but the employer is responsible. If you're providing accommodation and food, then you tax the employee at 20%. So that's how we treat housing benefits. Do we have questions on housing benefit? Anyone? Any question? So that was G. We are still doing non-cash benefits. So we've done housing benefit. Now we go to F. We'll call this fringe benefits. F, call it fringe benefits. So look at F. F fringe benefits. So fringe benefits, probably some of you have already had an experience with that, is any employer who gives loans to the employees, and he charges some little interest, not really little, but now compared with what the banks are charging, the employer probably would give loans to employees at a percent like 6% or 8%, while the banks out here are charging much more. Banks are charging between 18% to 25%. So a good employer would want to assist the employees, could provide loans to the employee probably at 8%, 10%. something like that. So that benefit is called fringe benefit. Now, when an employee gets a loan, we calculate the fringe benefit based on a formula. And the formula would be probably the amount of loan you have obtained, you multiply by the rate the commissioner fixes. There's a prescribed rate or market rate that is fixed depending on what what the central bank is charging on treasury bills. So from time to time, KRA would make an announcement, put in the newspapers, put on their website, put it online, that the prescribed rate or the market rate for fringe benefit, say from January to June or from July to December, is going to be probably 8%. So that 8% you'll compare with what the employer is charging. So if the employer is charging 6%, the difference 8% minus 6% is a benefit. Then you multiply by the amount of the loan, and that benefit is called fringe benefit. Then you calculate a tax on that benefit. The tax is called fringe benefit tax. And fringe benefit tax is at the rate of 30%. So, and it is paid by the employer. So the employer will calculate 30%, but he'll be the one to pay. So if the employer gives you a loan, you'll pay the employer the small interest you've agreed, but the tax on that loan will be paid by the employer. The tax is called fringe benefit tax. So fringe benefit, you say, where the employer has granted a loan, to the employee, at an interest rate, that is lower than the prescribed, or market interest rate, at an interest rate that is lower than the prescribed or market interest rate. Fringe benefit tax would be payable by the employer. Fringe benefit tax would be payable by the employer. Fringe benefit tax would be payable by the employer. And you say the fringe benefit is calculated by a formula. The fringe benefit is calculated by a formula. So here is the formula for fringe benefit. You say fringe benefit benefits FB, the amount of loan, then you multiply by the market interest rate, we subtract the low interest rate charged by the employer. Like that. Market interest rate minus low interest rate, that will give you the fringe benefit. And you say fringe benefit tax FBT is calculated as follows. So take fringe benefit so the FB, fringe benefit, multiplied by corporation tax. So the rate of corporation tax is 30%. And in B, fringe benefit tax. Is payable by the employer. So you'll not include it as part of taxable benefits of the employee because it's payable by the employer. Any question? Anyone with a question? Then you can try this example or illustration. Please try this. Mr. Kasuku was granted a loan. Mr. Kasuku was granted a loan of 2 million shillings by his employer. Mr. Kasuku was granted a loan of 2 million shillings by his employer at an interest rate of 6% per annum. At an interest rate of 6% per annum in 2023. At an interest rate of 6% per annum in 2023. The prescribed rate of interest, was 10% per annum. The prescribed rate of interest was 10% per annum, required to compute the fringe benefit tax payable by the employer. Compute the fringe benefit tax payable by the employer. Compute the fringe benefit tax payable by the employer. So please calculate that. Please calculate fringe benefit tax payable by the employer. Using that information, please calculate fringe benefit tax. So if you're done, you can share your answer. What are you getting for fringe benefit tax payable by the employer? Anyone? Or I repeat the question, okay? So Mr. Kasuku was granted a loan of 2 million shillings. Mr. Kasuku was granted a loan of 2 million shillings at an interest rate of 6% per annum. At an interest rate of 6% per annum by his employer. By his employer in 2023. By his employer in 2023. Then you say the prescribed interest rate. The prescribed interest rate was 10% per annum. The prescribed interest rate was 10% per annum, required, compute the fringe benefit tax payable by the employer. Compute the fringe benefit tax payable by the employer. Compute the fringe benefit tax payable by the employer. Okay, so just like we just apply the formulas here. For example, first you look for fringe benefit. FB. So fringe benefit is amount of loan. You multiply by market interest rate. Then you subtract the low interest rate. So amount of loan is 2 million. Market interest rate is 10%. Low interest rate charged by the employer is 6%. So 4% of this is 80,000. That's the fringe benefit. $80,000. The fringe benefit tax is fringe benefit. You multiply by corporation tax rate. So fringe benefit is 80,000 and multiply that by 30%. So on that loan, the employer will be paying 24,000 shillings. The employer will pay a fringe benefit of 24,000 shillings to the revenue authority. So if he has a number of employees, then he'll pay for each employee. If the employer has that policy, then the employer will have to set aside some amount to pay fringe benefit tax. Any question? Okay. So fringe benefit was H. Why did I call it F? This was H. Because housing benefit was G. Then we have I. I is going to be gifts. Gifts and rewards. Gifts and rewards is I, gifts and rewards. So I'm sure you're wondering, has it come to that even a gift would be taxed? Well, it's not your ordinary kind of gift. So for example, if you get a gift from a friend or even from a relative, that's not what we are talking about. We don't have taxes on such gifts. However, if a gift comes from the employer, then it is deemed to be part of your employment. So if you get a gift from your customer in the cost of work, like in hotels, hotel workers usually get tips, TIPS, and usually tips are quite large amounts depending on where you're working. I read somewhere last year in a hotel in London, there's a tycoon who left a tip of, was it 60,000 sterling pounds? And this amount had to be divided among, I think, all the hotel workers that were on duty that time. It was not just given to the one that had served, because it was a lot of money, 60,000 sterling pounds, a tip, and he just left it on the table and so on. Okay. So if a tip, or if this gift comes from the employer or comes from a customer in the course of work, then it's a benefit. It will be taxed. So gifts and rewards, you'll say, generally, gifts are not treated as taxable income. Generally, gifts are not treated as taxable income. Generally, gifts are not treated as taxable income, especially for personal gifts. Especially for personal gifts or gifts from friends or gifts from friends or relatives. So generally, gifts are not treated as taxable income, especially especially personal gifts from friends or relatives. However, a gift received by virtue of employment, however, a gift received by virtue of employment, for the services rendered, a gift received by virtue of employment for the services rendered is treated as a gain from employment. Is treated as a gain from employment. Is treated as a gain from employment. Hence, it is taxable. Is treated as a gain from employment. Hence, it is taxable. E.g., tips to hotel waiters. Tips to hotel waiters. Tips to hotel waiters. Christmas gifts. Christmas gifts. Or long service awards to employees. Christmas gifts or long service awards to employees. Christmas gifts or long service awards to employees. All right, so we've gone through a list of cash and non-cash benefits. So non-cash benefits could be more, but generally that would cover the biggest part of it. The rest we'll find out from past paper questions as we go along. So those are cash and non-cash benefits. Next in the list of the items I have talked about here, I said I'll give you a list of non-taxable benefits from employment. So next we look at a list of non-taxable benefits from employment. Non-taxable benefits from employment. The next we look at non-taxable benefits from employment. So we want to look at a list of items, even though you might receive from employment, yet they are excused. They will not be taxed, so they will not be included as part of taxable benefits. So we say these are benefits from employment. These are benefits from employment. These are benefits from employment that are not taxable, e.g., that are not taxable, e.g., and we list them. Number one, facilities. Facilities or benefits. Facilities or benefits to employees. Facilities or benefits to employees whose aggregate value. Facilities or benefits to employees whose aggregate value is less than 3,000 shillings per month, is less than 3,000 shillings per month, or in brackets, 36,000 shillings per annum. So if you get a facility in connection with employment, the employer could be providing you with free transport or any other benefit, as long as the value doesn't reach 3,000. That facility is non-taxable benefit. Number two, free meals. Free meals granted to employees, free meals granted to employees whose aggregate value, free meals granted to employees whose aggregate value is less than 4,000 shillings per month. Whose aggregate value is less than 4,000 shillings per month, or in brackets, 36,000 shillings per annum. Again, that's a non-taxable benefit. You don't tax that. So free meals will mean the employer is providing lunch, the employer is providing tea or snacks. So the employer will be required to value that. So if what is providing, if from his computation is 4,000 or above, he must include in the payroll. He must include in there as part of the benefits of the employee. However, if it is less than 4,000, then it is a non-taxable benefit. Number three is school fees. Number three, school fees. Number three, school fees provided to an employee. School fees provided to an employee. School fees provided to an employee or his dependents. School fees provided to an employee or his dependents as long as it is taxed on the employer. As long as it is taxed on the employer. As long as it is taxed on the employer. So there's a condition. So school fees is conditional, just like the others. The others are based on amounts. And facilities and meals are based on the amount. But school fees, the condition is the employer must be willing to pay tax for you. So if the employer pays your tuition fee for training, college, whatever, university, then the employer must also be willing to pay tax. So if he's willing to pay tax, it shall be a non-taxable benefit on the employee. But if he's not willing, the employee will be taxed. So it's conditional. Any questions so far? Anyone with a question? So school fees is conditional. Then the next one is called medical benefits. Again, this one also has a condition. So medical benefits, you say, shall be non-taxable if provided under a medical scheme. Shall be non-taxable if provided under a medical scheme which is non-discriminatory. Shall be non-taxable if provided under a medical scheme which is non-discriminatory. A medical scheme which is non-discriminatory. So what does that mean? So medical will not be taxed as long as it covers everybody in the place of work. But if the examiner tells you this scheme is only for those in management, or it covers only a certain group of employees, it means it's discriminatory. So the condition here, it must be non-discriminatory. It must be non-discriminatory. So it must include everyone. It must include all employees, then the condition will have been met. The next one is number 5. We call this passages. Passages or expenditure on travel. Expenditure on traveling by the employee. Shall be non-taxable if granted to an expatriate. Expatriate of the who is not citizen. Again, you can see what we call passages is called, this is expenditure on travel, but there is a condition. There's a condition, it is only a non-taxable benefit if the passages were granted to an employee who is not a citizen of Kenya, so he's an expatriate. He's only here for work. He only came to Kenya. So if those conditions have been met, it will not be taxed. So he could be traveling back to his home or traveling from his home to his country, home country to Kenya for work. Then passages will not be taxed. Then number 6, contributions. Register. Pension scheme. By the employer. On behalf of the employee. So if the employer makes contributions, the condition is these contributions must be to a scheme that is registered and it's made by the employer on behalf of the employee. It's a non-taxable benefit. Finally, we have free benefits. All those granted to employees at an interest rate that is lower than the market. So we just learned earlier that fringe benefit is taxed on the employer. So it's a non-taxable benefit on the employee. So this is the list of non-taxable benefits, which will be very, very useful for us as you go through questions. You will be leaving out what is not supposed to be taxable. So it's good theory to remember. Lastly, unless there's a question, do we have any question on this list? First of all, if I look at the last list, then I can give you some questions, past paper questions, which you can try for the next class. Any question? Anyone with a question? Okay. All right, so there's no question. I'll do the last list. So the last list is called allowable deductions from employment income. In other words, these are amounts that are deducted. They are deducted before tax is calculated. So they reduce the taxable income of the employee. So we'll finish with those allowable deductions. So let's finish with allowable deductions. Allowable deductions against employment. Allowable deductions against employment income, then you can say these are deductions that reduce. These are deductions that reduce the taxable income. These are deductions that reduce the taxable income. These are deductions that reduce the taxable income of an employee. The taxable income of an employee and include number one, subscriptions. Subscriptions to professional associations. E.g. ISPAC. Subscriptions to professional associations. So ISPAC is the Institute of Certified Public Accountants of Kenya. So once you complete your training, you will join membership because there are benefits of being a member. So to sustain the institute, there are subscriptions, annual subscriptions made for membership. If you are a practicing accountant, a practicing auditor, Now, these subscriptions made would be allowed as deductions. So you can take your salary, you minus those subscriptions before you can calculate tax. Then number 2, we have contributions. Who are registered or to register. Contributions to registered home ownership. Savings plan. So RHOSP subject to a maximum of 4,000 shillings per month. So that's the same as, no, it's not 4,000, it's 8,000. That's the same as 96,000 shillings. So I said I'll be giving you the current rates. So those are the current rates. So if you're making contributions to a scheme intending to buy a house or build a property, so those contributions per month to a registered home ownership savings plan can be deducted from your salary before tax, and the maximum you can get is 8,000 shillings per month or 96,000 per year. Then number 3 is contributions to a registered pension scheme. Contributions to a registered pension scheme subject to a maximum for pension, we have 20,000 shillings per month, in brackets 240,000 per annum. So if you join a scheme to save for your pension, probably some of you are already members of a registered pension scheme, this 20,000 per month can be deducted before tax on your salary. It's called a liable deduction. So that's number 3. Number 4, we have mortgage. Interest on a loan used to acquire owner-occupied property subject to a maximum of shillings 25,000 per month. 25,000 per month is 300,000 per year. So that's mortgage. Then we have the last one. So that's number 4. The last one, direct expenses incurred by an employee. Direct expenses incurred by an employee. In connection with employment. E.g., subsistence, or let me call it travel, and it's called travel and entertainment, yeah? And entertainment. Expenses incurred by a salesman. Direct expenses, any direct expenses incurred by the employee in the course of employment. Like if you're a salesman and you're paid for your own travel or entertainment expenses, then, and the employer did not reimburse, it can be deducted directly from your salary before tax can be computed. So that is employment income done. Any question? Anyone with a question? So we have finished employment income, but not really finished because we have to do now past paper questions on employment income. So our past paper questions, let me get your past paper question. Let me just get my past paper. Do I have it here? How many minutes do I have? Let me see if I can get your past paper question. You can try as an assignment. Oh, you can try any question because I can see I did not carry my past paper questions for intermediate, but that's not a problem. So in our next class, that will be on Friday, we will be looking at questions on this, on employment income. So I'll be reviewing past paper questions, starting from any question on employment up to last sitting and the other sittings. So I think we'll just end the class. I did not carry the past paper question today, but in the next class, definitely I'll come with a copy. I don't have, but in any case, I would have even downloaded online, but our time is up. It's only 2 minutes. So I guess the 2 minutes would just be for a question, if you have a question. But in the next class, we'll be looking at 3 or 4 past paper questions before I introduce the next topic. The next topic must be taxation of business income, after we're done with employment. That is, after we go through the past paper questions, then it will be time to look at business. But depending on how fast we finish, some 3 or 4 past paper questions. Any question? Okay, very well. It seems we don't have questions today. So we'll see you. Please come with your past papers, or you'll download them on Friday when we'll be looking at this. Please make sure you have copies of the past paper, including last sitting, and then we'll take a look at taxation of employment income, see how the examiner's questions look like. All right, so please have yourselves a good weekend. See you in the next one.